Joining us to unpack this, we have Seye Seton as a co-founder, Vendorcredit, to tell us how to navigate most of the issues that are still with us, even though we've had Naira stability. Great to have you on the show, Seye.
Great to be here, Ladi.
Yeah, I don't know if you're celebrating Naira stability, with me, so far, looking at the first half of 2025. How are the vendors doing?
Well, so the journey to here probably started in 2023 when the new government came on board and the appointment of the economic team. So you've seen what they had some issues that they made on ground. You had about $7 billion worth of forwards that Naira had been collected and funds had not been delivered. And off the bat, the CBN governor decided to tackle that immediately. So we have a situation where over the last, at least within 12 months, about 4.6 billion of that was cleared off. And that has an impact on investor sentiment as well, because nobody's going to be into somewhere that their money got stuck in the very first place. So we saw that happen. We saw them also take care of, inflation was on the rise. They had to increase MPR to where it is right now at 27.5%. Just a bit to tighten liquidity, so you had less Naira going after dollars. We also saw on the physical side, they made moves to ensure that a lot of investments went into ramping up production of oil, which is starting to pay off now. I think the last figure we saw was about 1.5, but if you add condensate, it comes to about 1.78 million barrels per day, which is what the average in the month of July. The security situation in the Niger Delta has eased out. There was a time when you couldn't go to Warri and be out of the house outside 6 p.m. But now you can club till 1, 2 a.m. in Warri. So there's been a lot of effort that has been put in from the government side. But we can also mention the fact that there are also external factors that come into play as well. So for instance, the dollar as a currency itself, right, between the beginning of the year and now has lost 11% in value, and that's because of the uncertainty around this tariff wars that the current president is executing, and he kind of plays into his own strategy as well, because he favors more of a devalued dollar in a bid to ensure that America is producing and exporting again. So we've seen all those things come to play, right? And the reality is that all these factors, right, have sustained us to where we are right now. But businesses always have it at the back of their mind that, as long as structurally, Nigeria still has a situation where we're still heavily dependent on oil, which is a commodity. And like most commodities, a lot of factors can interplay to, swing what you're considering to be a positive into a negative. So by virtue of that, you have a situation where companies can't still afford to just relax, right? You still need to be thinking actively as to how to seize the opportunities that the stability presents as at now, right? While also hedging against the risk that, this stability could be short-lived or it could dissipate over time. So companies have to still look at how they can, take advantage of this while having a long-term view of ensuring that, they protect themselves against the downside that might materialize anytime in the future. So, what we are doing, so I was just going to add that what we're doing, is some of the things that we could always continue to suggest is, you need to buy hedging instruments like forwards. Companies have to look at how they can narrowise, if I can say that word, or if I can use that word, their costs, ensuring that, they're looking for ways in which they can partner with local suppliers to replace some of the items that they're having to import. We have worked with local vendors and suppliers to ensure that we deliver those services to companies that are highly import dependent. And then they also have to find some way to blend their costs. They need to seize, borrowing in dollars right now is single digits, at worst case scenario, maybe 10%, slightly low double digits. While borrowing in Naira is, late 20s, early 30s in terms of exchange interest rates. So you need to figure out how you blend your costs such that, it kind of averages to maybe the early 20s or late teens in terms of interest rates and costs. And I think businesses also have to look lastly at how they need to earn foreign currency. I mean, there's nothing that stops you from 7 markets that we have access to across the West African economic space as well. So those are some of the things that businesses can look at doing to take advantage of the stability we have right now, and also protect themselves against the downside of a future devaluation.
All right, definitely. We're hoping stability continues, and at some point it grows straight into strengthening. That would be fantastic. But we know supply chain optimization for resilience is very important, and there's still that issue with rising import costs. You did mention the tariffs. That's definitely going to impact those that are trying to import at this time. What recommendations would you give for those that are still dependent on importing most of the raw materials that they need at this time? How do we nairalize all of those needs for businesses right now, make it be homegrown? What are you seeing there?
Okay, well, I think people kind of downplay the importance of supply chains. Supply chains have, for a lot of companies, especially in advanced countries, right, have turned supply chain to a competitive advantage, right? They use it as a tool or a weapon in this marketplace that they are competing for market share. And the goal shouldn't even be to be making your supply chain resilient. The goal should be you should make your supply chain anti-fragile. And by that I mean that you want a situation where your supply chain doesn't just withstand shocks and pressures, but matter of fact, it grows stronger under duress and in the midst of shocks and pressures. So, and some of the ways in which you can do that, like you rightly pointed out, is of course you need to localize. But for you to localize, you need to invest in research and development. Because, for instance, there's a company that I know that does beef rolls, for instance. And what they've done is they found alternatives. So instead of using beef, we know how expensive beef has been, and the fact that inflation has pretty much eroded purchasing power of their consumers. So they've had to find replacements, looking at things like tofu, which is soya beans, as an alternative. So if you're doing sugar, refined sugar, you need to start thinking about other alternatives as well. So whether it's, what they call this stuff, like alternatives to sugar, like brown sugar and a couple of other substitutes that you can use that are cheaper and are also locally available, but they are alternatives to refined sugar, to drive down your cost and ensure that your products you maintain the same quality, right? Or cornstarch for sugar as well. You maintain the same quality, but at a price point that is affordable in the market in which you are dealing with. And you can't do without digitizing your supply chains as well, because a lot of supply chains in Nigeria, especially for local companies or large local corporates in Nigeria, indigenous corporates, are still driven manually with paper and Excel sheets and spreadsheets. And there's a lot of data sitting in those silos. So digitization is a way to bring all that data together in one place and be able to analyze it. And if you're going to put in AI into your system, right, you need all that data centralized in a position where the AI can read through that data and ultimately be able to give you insights and guidance and direction on how you can move forward. And then for people that are doing imports, right, you start looking at partnering with local companies that you can outsource the importation of those items. You can partner with some of the vendors that we have to outsource the importation of those items, such that at the end of the day, your suppliers get paid in dollars, right? While you end up paying in naira. So as long as any business that is looking ultimately at selling in Nigeria, if your revenues are in naira, you need to figure out how your costs will be in naira as well. So we avoid the situation which we saw over the last 2 years, where FX devaluation pretty much wiped off the equity of some very notable blue chip companies in Nigeria as well. So those are some of the suggestions that we believe that we are already implementing with some of our partner corporates, and we've seen it work for them. And we believe that if other guys adopt it as well, other corporates adopt it as well, it will also do them a wealth of good.
Right, and looking at all the results we're seeing coming in so far in 2025, we're no more seeing all those FX losses anymore, which is great. I guess, thank God for these companies at this point. But thank you so much. It was great having this conversation with you. Seye Seton is the co-founder at Vendorcredit. Thank you for coming on today.
Thank you very much, Fadi, for having me again.